the Stock Trading Club conference in Madrid. I'm about to hit this stage and blow this fucker up. Now, I'm just kidding. I got awesome presentation ready to go for everybody how to treat the market open. And I'm going to put on a show. Wish me luck. Now, I don't need 1,000 ideas, but what happens is the more charts you go through, what happens? You start memorizing those patterns. You start to see them. It becomes intuitive. You may need to see 100, 200,000 charts in your life before you feel comfortable where you can say like, wow, this is this, this is this. And so the key is get it done quickly. Go through 1,000 charts every day. And what's going to happen after 100 days, you're actually going to be able to see every single pattern and you're going to be able to dominate them. So when I look for stocks, I run a couple scans. At night, I run a scan for 4% movers. What are stocks that move 4% that day? 4% breakouts. Then I look at the daily chart. The daily chart is the ideal spot to see what the big picture trend is, what the pattern is on the daily chart. Then from there in the morning, I narrow it down and I trade intraday. So always go through and look at those daily charts. I start with the 4% breakout scan. The next thing I'll run is a scan for trenders. So I'll start ranking stocks. I use a 90-day sort function. So what I'm doing is looking at all the top stocks of the last 90 days. Why? Stocks that move tend to keep moving. And so I want to be in the business of looking for what? Trenders. Throughout history, there's all these different styles of trading. But the one style that always holds true is trend trading. If you look at any Market Wizards book or this kind of book, where the real money is made is in what? Trading trends. And so you want to do a 90-day sort function, start ranking all the big trending stocks. Those are the ones that you want to trade, especially if they got good range. And what will happen is if you get a stock that's got a big trend on it, NVIDIA, Tesla, whatever it might be, you can trade that stock every single day for months. You'll start to know that stock. You'll start to understand it. Every stock has its own feeling, its own way of movement. And so when you watch that same name every single day because it's trending, you will know all its little personality quirks. Every stock trades a little bit different. Some have high floats, some have low floats. Some move $1 every 5 minutes, some move $5 every 5 minutes. So what will happen is you will know all these little things. And now when you trade that stock, you're going to trade with a lot more confidence. You're going to trade with a lot more, you're going to have that in your system, right? You're like, I know this stock. It always moves in this way. So always do that. So now let's talk a little bit about some patterns. So I trade 2 patterns at the open. Hold on 1 second. I was out very late last night. If you see a very short Indian guy here saying Lucci, it's his fault. He kept me out very late. My wife is back there. She was barking at me about 3 a.m. Get home now. So I trade 2 patterns primarily at the open, all right? One of them is an opening range breakout. So an opening range, hold on, that slide is garbage. Dun, dun, dun. There we go. Opening range breakout. So this is when you have a trending stock or a momentum stock. What you are looking for is a minimum 3 sideways candles at the open. Minimum. If you buy the first candle, you will lose. If you buy the second candle, you will lose. Almost all losses for new traders, especially in the morning, comes from what? You see some news on a stock, you buy the first candle, and you lose. Then you sell it, and it goes up later, and you're like, right? You're like, I knew that was going to go. Wait for 3 candles. It is going to keep you out of a lot of trouble. So candle 1, you make a range. Candle 2, it's under that range. The third candle or beyond, it could be 4, it could be 5. Now you want to hit it. Now the question with this is, okay, how do you manage the risk? When you do this specific pattern, always put the stop loss under the VWAP. Just a regular VWAP. Put it on your indicator list. Put it on your broker. Put it on your charting platform. Buy the opening range. Stop under the VWAP. Guys, one last thing on this. Watch the distance between price and VWAP, all right? If you are trading an opening range breakout, and there's a big distance between price and where the VWAP is, the setup is most likely gonna have a lot of risk, and you'll get chop outs, right? Anybody ever buy a breakout and it just kind of chops around? The reason it does that is because the pattern is too loose. Stocks get their power from consolidation. They get their power from basing. When you are buying too far from your moving averages, when you are buying too far from your VWAP, what happens is you will get chop and the trade will fuck around. So what you want to make sure is that that VWAP is right there. If you can fit your pinky between price and VWAP, that's a good, anything more than this, it's too loose. If you keep to this rule, you will save yourself a lot of stop outs. Now let's look at some charts. So this is Mara. So this is a very, very simple setup. You guys can do this right now. So Mara has some news out. So if you see here on the right side, that's a 5-minute chart. I don't trade 1-minute charts. Guys, no 1-minute charts. No drugs, no hookers, and no 1-minute charts. I promise you, it will save you money. When you look at a 1-minute chart, it's like, right? You can't really figure out what's going on. It's too many candles. It's too messy. And what will happen is you will buy and sell everything for 1 or 2 pennies. You will see patterns everywhere. If you use a 5-minute chart, a 10-minute chart, a 15-minute chart, you will get meatier trades. You will get bigger trades. Because the thing is, you need bigger moves, right? You're trying to grow your account. You're trying to make some money. You can't just buy and sell everything for 10 cents. You need a bigger move. So you want to use a 5-minute chart. So when you look at something like this, you'll see in the morning, you got a 50-cent gap on the chart, right? Now, you make a first high, that first candle. Now, look at what happens here. Second candle, under the first candle. Third candle, fourth candle, fifth candle. Finally, on the 6th candle, it breaks the opening range. The opening range is defined as that price of that first candle. Now you've gone sideways. That white line is the VWAP. So where is your risk on this? If you buy the opening range on this, let's call this 13.25, your stop loss is 10, 15 cents away. Your risk is so small on something like this. If you buy 2,000 shares, you're going to have $300 risk. Not bad for something that could trend for a big chunk of the day. Any stock that's going to trend, most likely, it's going to have an opening range breakout to start. That's where the trends start. Hold on. DraftKings. So if you see here, these are daily charts on the left. I put my stocks on the watch list based on the daily chart. I have to have a clean daily chart, something with some space above, right? So on DraftKings, you have your earnings out. It's starting to break out. So on the daily chart, you're clearing all these levels. Now what I'm doing is watching that opening range. First candle, you spike up. Second candle. Third candle, fourth candle, you start to clear it out. You put your stop loss under the VWAP, now you get the shot up. Now look, how you want to manage these trades, if you get 2-to-1, 3-to-1 reward to risk, sell half. Then use your 9 EMA. So that blue line is the 9 EMA. I use a VWAP, a 9 EMA, and a 20 EMA on these charts. What I will do with my lottos is trail them up the 9 EMA for as long as it goes after I sell my first half. And that allows you to take some income, but then also keep it for the big home run trade if it's gonna be there. Now guys, this is day trading, right? So when you make a trade at the open, how long are you actually gonna hold it most likely? For the open. Too many traders will just hold the whole day. We are day traders. If you take an opening pattern, you're most likely going to get out of it by the first hour. So look at the daily chart on this SMTC. What do you see? It breaks out, and always look left. Always look left on the daily chart. Are you clearing levels? So you break out over 70, what are you doing? You look left, you're clearing levels. Good. The daily chart says this is a go. So now you go to the 5-minute chart and you look for your pattern. First candle, hit 68. Second candle, you rest. Third candle, you break the opening range. You're going to buy this at $68. You put your stop loss at $67.50. You've got 50-cent risk. And now you got yourself a nice chunk. Don't worry about the price of a stock. Guys, if you have 100 shares of this, it moves $5, $500, not bad. Guys, this is day trading, right? We're here to make income. You're here to pay your bills. So many traders like, oh, I need 2,000 shares, 5,000 shares. No, you can have 100 shares. If it moves $2, $3, good, take it. And then do it again. And then do it again. And before you know it, by the end of the day, you have $1,000. And you are only trading 100, 200 shares. You don't need thousands of shares to make money. The amount of shares you have means nothing. So always be mindful. Look left, wait for the opening range breakout. Now, you can do this on the downside, all right? You can do this on the downside. So when the market stinks, you're not going to be taking longs. Guys, always look at the chart for the QQQ. That's your NASDAQ. When it is trending, yes, you're going to take most longs. When the NASDAQ breaks down, that 9 EMA goes down, and the trend changes, you want to start shorting. You're not going to be taking long. Small caps, mid caps, none of it matters. When the market goes down, everything goes down. So you want to do the opening range breakdown. It's just in reverse. So what you're going to do, you spike down, 1 candle, 2 candle, 3 candles. When it breaks the range, put your stop over the VWAP and let that thing flood down. You don't have to do anything, but make sure you wait for those 3 candles. You buy that first candle, you're gonna lose. You trade on 1-minute charts, you're going to lose. You do drugs and hookers, you're going to lose. I know this from experience. Well, not the hookers part, obviously, but. Now look, one is a breakout strategy. Breakout means you got to chase a little bit. You want to also have a pullback strategy. Very important that you have 2. 1 breakout, 1 pullback, 1 short strategy. You're good to go. So the quick pullback is an easy setup, guys. This is when you have a trending stock, a momentum stock. And what you're going to be doing is buying the first pullback. What I do is I use the 9 and 20 EMA. When it pulls back to that on the 5-minute chart, I wait for a green candle to hold. When I get that candle to hold, I'm going to buy it, put my stop loss right under that candle, and now I'm playing it to the upside. For some of you guys, who here chases? Anybody a chaser? I myself am a chaser. Degenerate chaser. Stock starts to move. I'm like, oh my God, I gotta fucking buy this thing. Right? You get really excited about it. If you are a chaser and you know who you are, this setup is the one for you. It will solve your chasing habit. Chasing comes for some of us, it's just a natural thing for some personality types. When you do the quick pullback, you won't be doing any chasing. You're gonna get in early. So let's get into these charts here. Hold on here. What do you see on the left? Stock is clearing out levels. Clearing out levels. So now what you're gonna do, when the stock opens up, let it spike up. Don't chase it. If it doesn't ORB, you wait for the pullback. So you're just giving yourself 2 options. If I see the opening range breakout, I'm gonna do it. And if I don't see it, I wait for the pullback. Wait till it pulls back to that 9 EMA zone. When you get a candle to hold, that green candle, when it sits there on the moving average, when that candle is done, you're gonna add it, you're gonna put your stop loss right under, now you play it to the upside, same rules. 2 to 1, 3 to 1 reward to risk, sell half, and then use your EMAs and trend it up. What do you see on this? 10. Look left, you're breaking out all these levels, right? Simple, simple. So if you notice this first candle, it spikes up. The second candle, it just hangs out. Third candle hangs out. There's no opening range breakout. That's okay. You just wait. Wait till it pulls back. When it tests into that 9 EMA, see that zone, that 9 and 20 EMA is shaded in. When you test into it and you get a green candle that holds, you're going to buy it, put your stop loss under, and now you're into this thing for the bounce trade. Very simple. You either ORB or you quick pullback buy. That's it. You don't have to do anything else at the open. This is simplicity. No scaling, no 1 minute charts. This is a one shot, one kill setup. Now, you can do this on the downside. So what do you see here? Look left on APP. What do you see? So if you notice here, when it breaks under 300, you get this big flush down. So what this is, it's a breakout setup, but in reverse. When you look left, it's clearing out all those levels. So now stock opens up. No ORB, right? There's no 3 candles sideways. It just flushes down. That's okay. You just wait. You're biding your time. When it starts to pop back up, what does it do? It goes into the 9 EMA, 20 EMA zone. See, when it starts to hold there and you get a red candle right in there, that's when you want to purchase this to the short side though, and now you're playing to the downside. Very simple setup. It's either ORB or quick pullback buy. Apple computers, very simple. If you look on the daily chart, what are you doing? You are breaking down levels. Now, when the stock opens up, you get a quick spike down. It starts to pull back into your EMAs. When you get a red candle to hold, you're going to take the short, put your stop right over it. Now you play to the downside. If it's a little too slow for you, use options and kind of supercharge that trade. Oh, wait, hold on. Guys, can you do me a big favor? Today is my wife's birthday. Hold on. Can we sing her happy birthday? She's that beautiful woman over there with that baby. That's my beautiful wife and my baby. Can we sing her happy birthday, please? Happy birthday to you. Happy birthday to you. Happy birthday, Miranda. Happy birthday to you. Thank you guys. I owe you big. I didn't get her a birthday present, so now when we look back 50 years from now, I didn't get you a present, but that was a nice song. Now, some tips before we end this bad boy. Don't worry about level 2. When you're new, everybody wants level 2, level 2. What's level 2? Do I tape read? Do I level 2? Dump it. It's all fake. All level 2 is fake. There's a level 3, and there's also a level 4. You don't have access to that. When you turn on your broker and you look at level 2, they show you 2 or 3 exchanges. Oh, I have ARCA, I have BATS, I have the NASDAQ. Guys, there are 80 exchanges and hundreds of dark pools. When you look at the level 2, you're just seeing like 1% of the book. It's not going to do anything. But what is designed for? The level 2 is designed to make you trade extra so they make more money. They used to charge for level 2 when I started trading. They charged for it. And then what they did was they made it free. And now you see traders just sitting there at the level 2 like, oh my God, it's going up 1 penny. Oh my God, there's a seller, there's a buyer, there's a seller. Look, you do that, all you're going to be doing is trading for pennies instead of dollars. Your job is not to trade for pennies. Who cares if the level 2 says 1001 buyer, 1002 seller? If you're holding it for $12, if you're holding it to $13, all it's going to do is make you sell it or buy it based on some hidden buyer that doesn't exist. You are not really seeing the whole order book. The level 2 is free for a reason. It is free to get you to click those buttons. It's free to generate those dirty brokers. No offense, Zimtra. I'm just kidding. It's made to make you trade more. That's it. Leave it alone. When you're new, you have so much to worry about. You have your risk management. You have your chart patterns. You have all this stuff to worry about. Forget the level 2 for now. You can always go back and add it in later if you really want to. No small caps, we already know this. Unless you're Eduardo, no small caps. Look at this guy, he's the best in the world at what he does. But that type of trading is hard fucking work. It really is. It's hard work. Think simplistic. Simple, simple, simple. If you trade small caps, I grew up trading small caps, they're great. I just don't do them anymore because I'm too bald, too fat, too hairy. So I don't do it anymore. But if you trade small caps, use 5-minute charts. You will see everything very clean on the 5-minute chart, but you can't see that on the 1-minute chart. It'll make you trade too much. Right now, there's like a big movement for journaling and data and all of that, and it's awesome. You know, use TradeZilla or whatever to collect your data, but don't overdo it. Too many times people get so caught up in the small data, but really trading comes down into the data that you can't collect. How are you feeling that day? Right? What's going on in your personal life? Did you get any sleep? Are you actually trading stress-free? Are you trading intuitively? Right? No matter what data you collect, what journaling system you use, you can't really data that. You could have all these trades, but if you're in a bad mood, if you're stressed, if you're chasing, that's bad data. Like you can have all of that in a journal, but what good is it going to do? Collecting data on shit trades doesn't really do anything because if you chased it, you oversized it, okay, well that's the data, right? So don't overdo the data. What I would do personally, I would playbook one trade every day. Take your best trade, playbook that trade. Take a picture of it. Write down your setup. Pattern. What was the pattern? Was it an ORB? Was it a quick pullback buy? No pattern, no trade. If you remember that for the rest of your life, you will save so much money. You do not get into a trade unless there's a pattern. Before you see it, you have to ask yourself, no pattern, no trade. No pattern, no trade. No glove, no love, unless you're in a committed relationship or she's really hot. 8s and aboves only, obviously. Now, separate your charting platforms and scanners from your brokers. Guys, this is important. Get yourself a charting platform. Make it a hub where you collect your notes. You get organized for your day. You live in that charting platform. 1,000 charts every day, you're gonna make it. You really will. There's zero chance. If you went through 100,000 charts in 100 days, that you would suck at patterns. It would be impossible. Imagine that. You told somebody, man, I don't know trading, but I went through 100,000 charts. It's just not statistically possible. So start tomorrow. 1,000 charts every day. Just start flipping through them. All you got to do is hit the space bar. You're good to go. Guys, master one time of the day. I like to trade the open. There's different setups for the midday. There's different setups for the end of day. Find a time that you like to trade, that you're good at. Focus on those specific patterns. Make sure you don't trade all day. The longer you trade, the more likely you're going to make a mistake and do something stupid. I almost always, if I have 5 or 6 good trades in the morning, I give it back during lunch. Because you keep jamming those buttons, at some point you're going to do something stupid. So walk away. Find a time you like to trade and go. That's my speech. I love you guys. God bless you all. God bless the United States of America and Spain.
Sabes que ahorita estaba hablando con Mariel y me dice, yo nunca había visto a tanta gente en España viendo una conferencia en inglés así.